Hello everyone and welcome back to another video in my channel Order Flow with Ethan. So welcome to the video number 26 in my channel here, and yes, my name is Ethan. I've been trading order flow for roughly 4 years now, and throughout these years I have built massive knowledge in this great trading market, and here am I on YouTube explaining to you how it works from A to Z. So please subscribe because I post great videos that will help you while trading the order flow footprint charts. So welcome to the section 26. Learn how trading the market actually works. So today we'll be discussing a great subject, and please make sure to stay till the end because I'm going to cover great insights about how the order flow works. So why do your setups keep failing? Because you basically are trading setups like, now I'm not talking about footprint, about candlestick charts. I'm talking about the order flow and trading the market in general. You're too focusing on patterns. You're focusing on this happens, do this. Institutionals are not too stupid to just know that your setup is going to make money for you. So they will always make you go against that system. If you do what you think should be done, then they would just take the contrary side so they can fill in their orders and make you lose your money. And that's how you hit your stop loss every time. You'll be like, oh, I followed this pattern I found online, and why is it not working? Yes, of course, they're not too stupid to make you win every time. Like, this is not just a place where you just win free money. No, you gotta do an actual job. You gotta work really for you to make money while trading. And this is why I'm telling you, make sure to take the right decision while trading. Don't just understand and try to remember every setup there's online, because that's not going to take you anywhere. Rather, you should be an institutional trader. You should understand why did the market go up, why did it go down, and follow the market behavior, because that's what's going to make you win money in 2026. So setups are just an illusion. The same setup doesn't always give the same output. So for example, here they say, oh, if you see this bullish engulf, something like that, then take a buy position because this random candlestick says, oh yeah, you should buy because it's gonna go up. Market conditions always change and people rely on patterns instead of thinking. So you should be thinking, will the market go up or down based on supply and demand, economics, and everything we have learned about footprint charts. And if you mix all of those together, you have a great insight about what's happening in the market. So you should switch from patterns into behavior. Don't just try to remember every three black brows or dark cloud cover, shooting star, bearish harami, bullish harami. These are not going to take you anywhere, except if you want to keep losing money every day. Yes, you can focus on these, but if you want to really be a professional and understand how the market works, you should switch up to the order flow. And yes, you should move from this to understanding when does the price fall and when does the price rise. And it's basically just supply and demand theory, the economics 101. Supply rises, the demand falls, prices go down. Demand rises, supply falls, prices go up. Just think of the market basically like that. People keep buying, and once they will say, oh, maybe this price is too expensive to keep buying. When the price goes down, they will think, oh, maybe it's too cheap to sell here, and the buyers would think, oh, this is a good price to buy. Market goes up. This is basically how it works. There's no Polish harami or whatever. Okay, so the market is human behavior. People have fears. The traders exit too early. They have greed. Traders chase those moves. Trap traders, which are on the wrong side, they're forced to exit. And we have aggression, market orders, pushing the price up or down. So supply and demand is basically imbalance. So you're trading the supply and demand. From here you can see imbalance. So as you can see, a lot of people bought and few people were interested to sell. Doesn't make them weak. They're just thinking, oh, maybe this price is too cheap for us to sell. I bought here, I'm not selling here. They gotta wait for the price to raise and then they would buy again. Buyers think this price is great. Like, just think of it yourself. If I tell you today, go and buy a potato for $5 per kilogram, while it was $2 yesterday, you wouldn't buy it. Okay, imagine you bought it for $5. Tomorrow you don't need it, you want to sell it, they tell you the price is $3. You don't want to sell, you be like, oh, wait for me until the price goes down, goes up. Then I am gonna sell. Well, basically that's the same thing here in the market. It's supply and demand together. You should understand why did the market go up and why did the market go down. And it's simply buyers against sellers. And you're here analyzing whether buyers wanna buy, sellers wanna sell, who's in control, who's weaker, and who's stronger. That's all you gotta figure out. And how do you figure this out? By footprints, by POCs, by single prints, by exhaustion, absorption, aggression, imbalances, and everything we have learned together in this channel. And of course, let's not forget our lovely delta. Okay, so what's the x-ray of the market? First of all, you have aggression. As I mentioned earlier, The market orders pushing price. People keep buying. They're interested. They want to buy. They think this price is great. Oh my god, like I would love to buy this price. I would love to sell. And they keep selling all their orders. They all go short or they go long. Depend on their interest. We have absorption when big players stop price. We have people keep buying, buying, and buying. They might be still in interest to buy, but sellers think, oh, that's a great price to sell. And they come in with big, huge numbers and they go short and they sell. Those are big players stopping the price. Then you have exhaustion, one side running out of strength. Well, they kept buying, they're maybe not interested, they're running out of money. They spent a lot, they don't want to buy anymore. Or maybe they just filled in all their orders. I'm like, I'm good, I bought what I need. I'm not just gonna buy, I wanna sell maybe or something. Like, yes, I'm good right now, I'm fine, I bought what I wanted to buy, and I'm just wait for the market till it goes down again. So this is basically the X-ray of the market. And yes, if you have no context, you have no edge. Range and low conviction, like here you can see we have a market that doesn't really tell you its direction, so you might just not trade here, but here it's completely strong and there's a trend, there's a downtrend. You have delta divergence, you have here with the delta either, as far as I remember, it's green delta and the market is still going down. POC at the top with this huge volume, and imbalances just keep on existing here, and that's a great sign for you to take a position because you have a strong participation of sellers. They're basically interested in selling and no buyers interested in buying, and that's what you should do. So maybe those people shorting here are now buying here so they can take their profit. So just think of it like this: maybe here they bought, maybe one time here, oh, they want to buy again, and the market will keep going up. So that's basically how it works. Okay, so price doesn't reverse randomly. Price reverses when one side cannot continue or the other side cannot simply, oh, I said it 2 times, sorry. And this is shown in order flow through absorption, lack of continuation, and exhaustion, as I explained before. So price is simply value. As I mentioned earlier, price went up, sellers think it's too expensive to keep, oh, buyers think it's too expensive to keep buying, and here we see they're not buying anymore, rather they're selling with this great delta here. So they kept buying at one point, they were like, oh no, that's enough, we've bought enough, now we are selling. So they started selling, went up here again, and then we went on a downturn. They kept selling, selling, selling. At one point they were like, it's too cheap to keep selling. No, people sold at this point, I'm not selling here. So buyers also are interested now. We have delta divergence here and here, and the buyers think it's too cheap to buy, and they just started buying and the price goes up again. And this is basically how the whole world of economy works. If you just know basic economics, you can trade because you're just analyzing this, and the order flow shows it to you in a very smooth way. So think of this price versus delta relationship: price up, delta up. If they go together, that means you have strength. Like here, if you have a flat price and the delta that's going up, that means absorption. If you see here, for example, that's the case. If you have price going down and delta on the other side, that means a trap. And here is it, we see it in front of us. So that's why I'm telling you, make sure to take the greatest positions and not just go and trade whatever you see in front of you. So stop predicting and ask yourself 3 questions. Who is in control? Is there imbalance? Is there confirmation? Because once you answer these, you already built an understanding about your market condition. So thank you guys for your time watching this video, and I hope to see you in the next video when we will have an important topic to discuss together. So please let me know if you have any questions, and if not, make sure to follow my channel. I post daily videos from Monday to Friday explaining the order flow for you. So this was Ethan from Order Flow with Ethan, and thank you for your time. Goodbye.